Welcome to the Teaching Tax Flow Bonus Depreciation mini lesson. There's a lot of content in this mini lesson and a lot of calls to action. So this might be one of those mini lessons that you pause and take notes or have on another monitor while you go through Teaching Tax Flow. Let's jump right into our agenda. There are 5 new rules for bonus depreciation under the Tax Cuts and Jobs Act of 2017. We're going to actually look at a sample Schedule C and Form 4562 to show you how bonus depreciation will appear on your tax return. We're going to really define when an asset's placed into service. So it's going to get technical again under Publication 946, and then look at a depreciation phase-out schedule for bonus depreciation, and then talk about state tax considerations. So let's dive in. The next 2 slides are going to simply go through a lot of the 5 new rules under the Tax Cuts and Jobs Act of 2017. I took the liberty of highlighting some of the key components here where it comes to eligibility requirements of the asset, when it comes to can you elect out of it. So just understand by default, if you buy a new asset that's an eligible asset, you will receive bonus depreciation on your tax return. You can elect out of that depreciation if you want to, especially if you're a green diagnosis. We have a whole separate mini lesson just on that. It doesn't have to be new property. It could be previously owned property. That's question 3. Question 4 and 5 really talks about when you self-construct a property, and then also bonus depreciation just being another name for additional first-year depreciation. So again, I know these slide 2 and 3 is real wordy. That's why I said pause the mini lesson if you need to really dive in. But understand that the Tax Cuts and Jobs Act of 2017 completely changed how we look at bonus depreciation and its use. We're going to talk first about when an asset's placed into service. That's a question we get constantly on Teaching Tax Flow, especially for rental properties or people buying a piece of equipment right at the end of the year. So you place a property into service when it's ready and available for specific use. It could be a rental property, could be business activity. So when a vehicle or a piece of equipment is ready for use, or a rental property is ready to be rented and you're advertising it, that's when it's placed into service. Now let's jump up to Schedule C and Form 4562. These are forms that attach to tax returns, Schedule C being your 1040. You could see if an asset is placed into service at $62,500, it goes right on this line for depreciation and can create a loss. The 4562 will show specifically with special bonus depreciation allowance here on line 14, and that's where you report the bonus depreciation for acquired assets. Now, bonus depreciation is at 100% for 2022. That is phases out under the Tax Cuts and Jobs Act down to 0% in 2027, and it goes down by 20% per year over the next 5 years. There's no maximum amount of bonus depreciation where there is on Section 179, and you don't have to have income to deduct bonus depreciation. Calls to action, we have a lot of them, so I'm going to go through these. If you've acquired new or eligible assets, determine if bonus depreciation makes sense for you and gives you the best result possible. Think long-term when you're making deductions or deducting the cost of the equipment. It doesn't always make sense to take all of the deduction at year 1. Beware of some recapture rules. So if you sell an asset that you completely depreciated, that sale is now subject to tax under the depreciation recapture rules. Remember that using that bonus depreciation is automatic, and if you don't want to utilize it, you have to make that election out. And really look at that interplay between bonus depreciation and Section 179 deduction. We have a completely different mini lesson just on that Section 179 deduction. Always consider state tax. There are several states that do not allow bonus depreciation or don't follow the federal law. So you're going to want to make sure you keep track of your state depreciation schedules. And if you're operating in a state like that, seriously consider using a tax professional. If you have real estate investments and you're thinking about taking advantage of the cost segregation or bonus depreciation on a cost segregation study, check out that mini lesson and also check out the car and truck mini lessons, specifically talking about bonus depreciation on eligible vehicles. All right, thanks for watching this bonus depreciation mini lesson. Have an awesome day.
John here from Teaching Tax Flow. I wanted to thank you for watching this video. We literally have hundreds of hours of content between podcasts, webinars, videos just like this built specifically for you, the taxpayer. Whether you're a full-time employee, you're a freelancer, you're a contractor in some other sense, or you're thinking about getting into business for yourself, everything here at Teaching Tax Flow is perfect for you, basically going off of the roadmap provided by the IRS to legally and ethically reduce the taxes paid over your lifetime. So be sure to subscribe to this channel and connect with Teaching Tax Flow, and we will see everybody very soon.